Alexis Nolan from Mining Journal Select, and I'm delighted to be here this afternoon with Kurt Budge, the CEO of Beowulf Mining. Kurt, thank you very much for joining us. It's great to have you here. Now, I know as a company, you're sort of focused very much on the green energy transition piece, and you're very much a multi-project company. Obviously with that very strong European focus, with iron ore in Sweden, graphite in Finland, and then in Kosovo, some exploration that's going to bring in some zinc and lead and copper and maybe a bit of gold and silver as well. But the primary focus at the moment is clearly around Sweden, around your iron ore, where you're clearly moving forward with purpose. So you had your scoping study in January this year, PFS planned for this year, I think, DFS next year, and then construction in 25, production in 26. So you're not hanging around. No. And I know for your January scoping study, that's very much around just part of the property that you have there in Sweden. So perhaps as a start, do you want to just sort of bring us up to speed with where you were with the scoping study and actually how that's evolving as we move through this year?
Yeah, if we take a step back, actually the last year with the Kallak project has been quite transformational because we had the 1-year anniversary of getting the exploitation concession on the 22nd of March. And as most observers of Beowulf will know, we've waited a number of years for that permit to be granted. So that was a key milestone for last year. And then we strengthened the leadership team in Sweden with the appointment of Ulla Sandborg as CEO of Jokkmokk Iron and a new chairman who came into Beowulf in November of last year. But the scoping study was another key milestone. I was very pleased to get that out, especially with the capital raising ongoing. The economics of that, good set of economics, net present value of $177 million, 14.5% IRR, and lots of upsides. As you rightly point out, the scoping study was only focused on Kallak North. So that's a defined resource of 111 million tons in the ground at 28% iron content, which upgrades to something in the around 70% mark in terms of iron content, which is a product that traders of iron ore are looking for when it's going to be available on the market. And we have both many levers to pull in terms of increasing the value, be it resource scale, a longer life mining operation, a higher production rate, or there was a key assumption in the base case for Kallak North around how much product we would actually sell to direct reduction, which attracts a higher price than the blast furnace market. So we have all these aspects of the scoping study which provide upsides for pre-feasibility. So, we're optimistic that net present value is only going to go in one direction, which is up. And, we just gave a flavor of that by showing the sensitivity to the spot prices in January, which bumped the NPV from $177 million to $852 million. Yeah. Now, nobody's saying that we're going to get spot prices forever, but it just gave an indication of the potential there. What we have in Sweden and Finland is, an iron ore project that is facing into the green transition and the decarbonizing steel sector, and also fossil-free steel projects being built in the Nordic region. But then in Finland, it's the graphite company, and we've stated an ambition to get into anode materials production, which is facing into the lithium-ion battery sector. So you got defined resources in two stable jurisdictions, production stories facing into markets that are only going to go in one direction and grow.
Yeah. So in terms of that PFS journey, because the PFS journey is not only on the Swedish side with the iron ore, it's also with the graphite. So yeah. With the iron ore first, what are we're likely to see an expansion of the resource that we're looking at there?
I think the focus is really on getting Kallak North to market. Yeah. So we're not looking at drilling that would expand the resource for the time being. We've got a body of work on Kallak North. The focus is really on optimizing that case. And when I came out with the ambition of having Kallak North in production in 2026 last year, it was because I was seeing authorities, both specifically in Sweden, with downstream projects, green steel projects, going from concept to potentially fully environmentally permitted within 3 years. And I'm thinking to myself, you know, we've been developing the Kallak project since 2006. We've made an application for an exploitation concession. And I think what needs to be understood is the depth of work that was actually done to support that application. Because on the one hand, it was very good to get the permit decision. On the other hand, there was no criticism of our application because our application was of the highest standard, which puts us in a really good position for environmental permitting. So yeah, we've got ambitious targets with regards to bringing assets into production. And I think the European conversation, which is looking for greater self-sufficiency, strategic supply within the region, as well as doing bilateral deals with, you know, other geographies to import and satisfy our needs. But I think we're getting more and more support coming from the EU and looking at the Nordic countries as a whole and saying, you know, you're resource rich, please play your part as EU member states.
Yeah, and in terms of the investor story, because you're right, that's the fundamentals all really clear. In terms of the investor story, how are you seeing that progressing over the rest of this year, do you think?
I think the danger with a pre-feasibility study is it seems sometimes as a bit of the doldrums. There isn't a great deal of news flow. And the approach that I'm taking is that going back to these value drivers around increasing the value of the Kallak North project is to really focus our efforts and energies on articulating the upside in value around specific key areas of the project and also de-risking the project in certain areas. So it's going to be a lot of communication from the company about the journey that we're going on through pre-feasibility, not waiting for 9 to 12 months for us to complete the study and then stick out the results. It'll be an ongoing conversation with the market.
Lovely. Well, it's going to be an exciting year, and thank you very much for updating.
Thanks very much.
Good luck. Cheers.
Thank you.
Thank you.